What are the best strategies if you're thinking about giving it as a way to kind of reduce your taxable income?
Well, from a tax perspective, one of the more important things you can do is to utilize what's called a qualified charitable distribution from your IRA account. Now, that's not for everybody, unfortunately. You must be 70 and a half in order to do that. Now, the nice part about that age is that when the feds changed the required minimum distribution age to 72 and then 73, they left the QCD, the qualified charitable distribution option, they left it at 70 and a half. So that part's good. What that means in English is that you can request your custodian. Let's say you have money at Fidelity or Vanguard, any of the big firms. You would fill out a form and designate your charity that they would send money directly to. And because you never get receipt of the money, it goes directly to the charity. It does not get entered on your tax form as a taxable event. And it does go to satisfy, for those that are now over age 73, it satisfies your required minimum distribution. So with our clients, we typically ask them to do them early in the year because of the tax rule that says the first dollars out of your IRA go towards your required minimum distribution. So later in the year, it might not be as effective. However, a lot of people do wait until the end of the year to take their required minimums. So if you are charitably inclined, it's not a bad way to go because it never hits your tax form. And for those people that might be at the threshold where there may be a surcharge on their Medicare Part B premium, this is a way to keep their taxable income below that threshold. So there's many different things to think about and look at when it comes to donating. And the other part is many people, because of the high standard deduction that we now have, most people do not itemize. Less than 10% of people itemize. So if you are charitable and you give money every year, you may want to consider bunching your return, your contribution. In other words, put 2 years worth in one tax year, and that may bring you to a point where you have enough to itemize your deductions and then be able to take that as a reduction of your taxable income.
What is the typical threshold in which you are able to itemize your deductions? I'm sure it varies based on salary. Is it a certain percentage or how does it work?
So there are two numbers, whether you're filing as a single tax filer or married filing joint. For a single person this year, it's $13,850. So if you don't have more than that to deduct, you're better off with the standard deduction. For a married couple filing joint, it's $27,700. And that'll go up a little bit next year as well. It goes up, factored up each year by the IRS. So with that, when you think about it, fewer than 10% actually itemize now because that is such a generous standard deduction, which as of 2025, all this goes away because in 2026, all of this goes back to where we were in 2017. So then we'll be back to an exemption amount, and the standard deduction is going to be much lower than it is here.
Yeah, I mean, with a deduction that, to meet that kind of level of charitable giving where it impacts your taxes, do you think that that's part of the reason why charitable giving is down to a degree, potentially?
I do think that people that can write off their charitable contributions give more, just generally speaking, because they'll say, well, at least I'm getting a deduction on my taxes. Now, for a couple of years, you were able to donate $300 if single filer or $600 for married filing joint, even if you were taking the standard deduction. But that was only for a couple of years. It'd be nice if they brought that back, because when you start adding up 300 and 600 by millions of people, it can add up to a lot of money for charities. And I think that may be part of why it's down for this year, because 2021, you had that advantage.
One of the other things that I know Allie had mentioned to me was, some people have had a fantastic ride in the stock market lately. How can you use your gains in the stock market to give back this holiday season?
That is an absolutely great way to give, because when you say you bought a stock way back when, we've got clients who bought Apple stock in the mid 80s. It's up an enormous amount. Even though the markets have been having trouble, they're still in a very profitable position. They can make a gift of shares of stock to a charity, and that charity can cash it in and not pay income taxes, where if they had to cash it in, they would have to claim all that gain and pay a capital gains tax, and that would have to go on the tax form, and then they would write a check to the charity. So the better way to do it is to just gift a number of shares to the charity. And that's a great way to do it. And if you do that, and if you do that at a higher level, you can actually deduct up to 30% of your adjusted gross income on that type of a contribution or donation to a charity if you use what's referred to as a highly appreciated asset. And there are, lots of different levels that we could go to. If somebody wants to sell rental property because they're just tired of the headaches and everything, but they have a huge capital gain, there is a strategy where we could structure a charitable remainder trust. They convey that into the charitable trust. The trust sells it. There's no tax due because it's a nonprofit, and they can still get income from it. And then they're taxed as that income comes out. And then the balance when they pass away goes to the charity. So it's a higher level, but there are many different ways to look at how can you benefit a charity.
And are most charities equipped to receive gifts like that, or is it, the American Red Cross or bigger charities that are ready to take your stock gains?
Yeah, it would typically be a more sizable charity. I don't think it's all that complicated for them, but they have to have, you would want to give to a 501c3 qualified charity to get the deductions anyway. So most of them should have the wherewithal to have an account to receive the stock, and then they just liquidate it whenever they're ready to use those funds. But to your point, the bigger charities certainly are well equipped to do this. So the Red Cross, Salvation Army, I would think that the Boys and Girl Scouts and Boys and Girls Clubs would also likely be able to accept those.
Jeff, any other tactics for giving back this holiday season that, go beyond the normal donating money?
Beyond donating money, and if people want to do something for a charity, you can always go through the closet, and you've got clothes that you can donate because people are always in need of clothing. So you can donate clothing or articles in general. You can volunteer because most charities are always looking for volunteers. So those are non-financial ways that you could help your charity and kind of get a warm, fuzzy feeling from doing that.
Awesome. I love it. Jeff, anything else I didn't ask you that you feel like is worth mentioning?
No, I think yes, one other thing. When it comes to donating to charities, ask your employer if they have any type of a gift matching program, and maybe that can amplify the amount that goes to your favorite charity.